principles. So let's take a look at that. Now, the way in which I'm going to do this is I'm going to step back in time, which you can do with the software. I'm going to step back to this date over here, the 8th of August, and we're going to have a look and we're going to see what the software would have been predicting at that time. The way that I do that is very simple. I enter the date at which I want to end the analysis, specify the last bar of the analysis. I say OK, and you'll notice that Sentient Trader grays out the bars that it is not analyzing, and it performs a new analysis as of that particular bar. Now, some people might find it a bit disconcerting that they're seeing grayed out bars over here of where the price is going, particularly when you're evaluating the trading decisions the software is making, because as human beings it's really difficult to look at it and say, and to simply ignore these grayed out bars, because we know that's where price is going. And if you find yourself shouting at your computer and telling it not to make the trades, then you need to go to Tools, Options, Chart, and scroll down to Plot Future Price when back testing, and deselect that. Click on the Apply button, and you'll notice those bars disappear. Okay, so now this is genuinely what the software thought was happening on the 8th of August. Of course, the market had been falling in line with what Sentient Trader was expecting to happen, and at that point it was falling. And here is the 20-week trough, the circle and whiskers of the 20-week trough. So Sentient Trader is looking for the software to find the 20-week trough coming up pretty soon. In fact, on this day, on the 8th of August, the end of the range was the following day, the 9th of August. So Sentient Trader is saying, I'm really expecting this 20-week trough to happen now. Okay, it really is overdue. Why? This is what you might call, tell me if I should slow down or speed up, but let me just present, show you here what's happening. The 20-week trough is expected over here. However, the synchronized troughs of the 80-day and all cycles shorter are represented by this inverted pyramid over here. Let me turn on my whiteboard, and then I can draw on this chart. You see this inverted pyramid over here. So it's an upside down triangle. That is representing the most likely period of time in which the 80-day cycle trough is next expected. So in other words, it's expected here. And the 40-day cycle trough, which is synchronized with that, is of course expected at the same time, because Hurst's principles stipulate that the troughs of cycles are synchronized, and therefore we are expecting a 40-day cycle trough at this time as well, and a 20-day, and a 10-day, and a 5-day. Now you'll notice something else, and that's that this 20-week cycle trough should also be synchronized and lined up with that pyramid. So in fact that pyramid should really extend all the way up to the 20-week cycle over here. Why doesn't it do that? It doesn't do that because Sentient Trader has stretched these cycles here, 80-day, 40-day, 20-day. It stretched them to place the 80-day trough over there, and the 40-day trough over there, and the 20-day troughs where they are, and so on. Okay, so the best analysis that it's found for the shorter cycles ends up placing the 80-day trough over here. Because it's stretched the cycle, and we'll measure it in a moment when I turn off this whiteboard, because it's placed the 80-day trough over here, it is therefore stretching the 80-day, 40-day, and all cycles shorter, and therefore it's expecting the next 80-day cycle to occur quite a lot later. The 20-week cycle, which last at a trough here, has not been stretched, and therefore it is expected earlier. When this kind of situation arises, and it often does arise, then that is usually an indication that in fact this analysis here is likely to soon be rejected, because we are expecting the 20-week cycle trough to occur really very soon, sometime over here. and the finer details of the analysis will often sort themselves out. As you become an experienced Sentient Trader user, you know that this kind of analysis presents you with a lot of opportunity. The market is moving down really fast, and therefore we are expecting the market to move up into from the 20-week trough fairly soon. Okay, let me turn that off. So, what does that mean in terms of trading? Well, the important thing to realize about Sentient Trader, or about Hurst's trading methodology, is that we are always looking ahead. I said that I'd measure that 80-day cycle. Let me measure it quickly. You measure it by pressing down the control button, and you can measure the length of that cycle. That 80-day cycle from trough to trough is 99 days. The average length of the 80-day cycle should be 68 days. I know that sounds weird, but 68 days is the true average length of what we call the 80-day cycle. We call it the 80-day cycle because that's an easy way of thinking about it than calling it the 68-day cycle, which is a bit complicated. So the average length of the 80-day cycle is in fact 68 days. That's what's called the nominal length, the true average length. So a 99-day cycle is a very long one. But why has the software put that trough over there? Because when it looked at the other options for that cycle, it found this trough over here, it found this trough over here, and it found that trough over there, and it didn't like any of them for a prominent trough, the 80-day cycle. So it in fact pushed that cycle all the way out to over here. But let's not get bogged down by details about the analysis, although of course the two do go very much hand in hand. Now let's quickly take a look at our trading settings. I'm about to speak about trading. Let's look at first of all what cycle we're trading. You can trade any cycle that you like, from 18 years all the way down to 5 days. In fact, trading the 5-day cycle would prove to be very unreliable. So we wouldn't recommend it. But we are choosing the 40-day cycle for all kinds of reasons, particularly in terms of the average percentage return that you get from the 40-day cycle, the number of trades you take per month, all that kind of thing. We've chosen the 40-day cycle. The 40-day cycle is generally a very clear cycle in stocks, and it's a very good cycle to trade. Let's not get bogged down by further trading details at the moment. So we're trading the 40-day cycle. What does that mean? Well, let me activate the whiteboard again and show you the 40-day cycle. I see I've missed a question. I'll get to it in a moment. Let me quickly on this whiteboard. Here is the 40-day cycle at the bottom of the chart. Okay, that's the 40-day cycle. Okay, and if we look at it in price, you'll see that if I try and sort of replicate those shapes here, then those are 3 40-day cycles, and the next one, let me just do sort of a dotted line. We're expecting to do some kind of a move like that. Okay, that's what we're expecting next. Now, what's very important is that using Hurst's trading methodology, you're all looking ahead. You're not talking about what's going on now. You're not thinking about what's going on now. Well, anyway, let me not dwell on that. You're always looking ahead. Okay, so what's happening at the moment, clearly the market is moving down into a trough of the 40-day cycle. Okay, turn that on again. The market is moving down into a trough of the 40-day cycle. I have received many emails from people saying there's something wrong with Sentient Trader because it's telling me to buy and the market is moving down. Okay, there's nothing wrong with Sentient Trader. When the market is moving down, Sentient Trader is looking ahead at the next thing that is going to happen. When the market has moved down this much, we are expecting it to reach a trough very soon, as indicated by this circle and whiskers over here. There's the circle and whiskers. We're expecting it to reach a trough within that time range. That time range is drawing to an end. It should reach a trough very soon. So Sentient Trader is not going to think about selling this instrument. Sentient Trader is going to start thinking about buying it. Okay, that's very important. So when the market is going down, usually what's going to happen is Sentient Trader is going to say, I want to catch the next move. This move is nearly over. I need to catch the next move, which is going to be up. Okay, in order to catch the next move, you need to start thinking about buying. So at the most basic level, that's what Sentient Trader is doing. It's saying, what's coming next? What's coming next is that the market's going to move up, so we need to consider buying it. Okay, now, would we in fact consider buying it? When we are trading the 40-day cycle, many people would think that you need to buy when that cycle's moving up, as is happening here, and you want to sell when that cycle's moving down into a trough. Buy when that cycle's moving up, and sell when that cycle's moving down. And for sake of completeness, buy when that's moving up, sell when it's moving down, and now, of course, we're thinking about buying again. That's many people's simplified perception of what should be happening when we're trading cycles. However, that is not the way one should be trading cycles, according to Hurst's cyclic theory. Why? Because a very, very important aspect of Hurst's cyclic theory is that although we trade one cycle, we're trading the 40-day cycle, we must bear in mind all the other cycles. The price movement is composed of a combination of the influence of an infinite number of cycles. We cannot possibly calculate an infinite number of cycles, so we limit ourselves to as many cycles as we possibly can. And you can see the software at the moment in this analysis has calculated cycles all the way from 5 days all the way up to 18 months. And we're trading the cycle pretty much here in the middle, the 40-day cycle. So when we're trading the 40-day cycle, we don't only consider where the 40-day cycle is. Of course, we consider where the 40-day cycle is, but that's not all that we consider. What's very important is that we consider other cycles. We consider, in particular, the longer cycles. So the one cycle longer than 40 days is the 80-day cycle. That's this pale blue cycle over here. And 2 cycles longer than the 40-day cycle is the 20-week cycle, which is this dark green cycle over here. Now, Hurst recommended that you consider as many cycles as you possibly can, but he did also, in what was a slightly contradictory fashion in the cycles course, recommend that when you're considering trading, you only consider the 2 cycles longer than the trading cycle. Sentient Trader follows Hurst's advice and considers the 2 cycles longer than the trading cycle. Our trading cycle is the 40-day cycle. That's over here. 40 days, and the cycle longer than the 40-day cycle is the 80-day cycle, and 2 cycles longer is the 20-week cycle. Now, what did he mean? You consider the longer cycles. What he meant is that you need to consider how the longer cycles are influencing price. And that's a very simple thing to answer, fortunately. You ask yourself, are the longer cycles causing price to move upwards or downwards? It's really as simple as that. And how do you work that out? Well, you work that out by pretty much plotting semicircles. So let me turn off this whiteboard and plot semicircles, and then we can, and then I can demonstrate it to you. Right. Turn on the whiteboard again. Okay. So grab a pen. Okay. Here's our 40-day cycle, which, as I've mentioned, is going up and then down, okay, repeatedly. What are the longer cycles doing? The semicircles tell you all about it. The 80-day cycle is going up over here. Can you see this cyan blue cycle? That's the 80-day cycle.